With less than 10 days remaining of Bitcoin sideways consolidation, a large move is brewing. Will Bitcoin break through the upper band of the Gaussian channel at 38,000, resulting in a strong continuation upwards, or are we going to see an inevitable correction to 32,000? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. In today's video, we're going to be taking a look at Bitcoin from a short-term perspective, a macro perspective, a technical and structural perspective, and of course going over absolutely everything you need to understand what is happening with the price action and what to look out for. With just less than 14 days remaining of this consolidation, Bitcoin is preparing for the next major move, and we want to be on top of that move, understand what to look out for that move, and of course profit from that move. So without further ado guys, we'll get into it, but before we do, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more in here, guys. If you're interested in getting access to all of our setups, and of course getting access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news chat, our help chat, and our daily video chat, go ahead and contact me via the pinned comment in the free channel for more information. Let's go ahead and jump in, starting on the market data. So how are we looking? 24-hour volume has dropped a considerable amount. We are sitting down 31.17% for the 24-hour period, sitting at a total of $70 billion. You can see at the top left-hand corner. As for 24-hour liquidations, we are sitting at 60 million, with a very even split between longs and shorts, coming in at 32 million for longs and 27 million for shorts. This is very indicative of the fact that we are seeing a lot of chop on Bitcoin, a lot of sideways price action, and more importantly, a lot of indecision. If we look at the last 24 hours, which was around about the start over here to here, the last 24 hours, we have seen a swing toward the upside, a swing toward the downside, but more or less we are still in this same price range we were 24 hours ago. So again, a lot of chop in the last 24 hours. And with that, we see liquidations on both sides of the spectrum. Moving over to that volatility index, we can see in the 30 and the 60, not too much has changed. We saw volatility jump up, and in recent days we've seen volatility come back down as Bitcoin has basically just been chopping sideways for a while now, right? If we look at the price action, ever since around the 10th of November, we have been having these large swings between 38k and this uptrending trend line. This uptrending trend line, which we established over here. It was an established trend on the 8th of November. We have retested it, and we even saw a fake out because of that Binance news a few days ago, and we have come up and retested this range a few times. We're seeing these massive swings up and down, up and down. We're going to see compression. We're going to see these swings get smaller, and we're going to see a definitive and decisive move from the upside or the downside before we get to the 5th of December. So we don't have a lot of time left in this range, and we're going to see a strong directional move from this range we'll be discussing in today's video. Moving over to the Dow Jones, the DXY, and the S&P 500 before we get into Bitcoin. The DXY has come down and found support, right? We have come down and retested this 103 level. We are expecting a bounce from this level. Again, support is support until it is not, until it is lost. If we do lose the 103 level, that is when we expect a continuation downwards to around 101. Potentially 101.5, around about that area. Of course, if we do want to see the DXY gain strength again, we will need to break above this downtrending diagonal trend line represented by that solid black line. So there's still a while to go before the DXY will actually gain higher time frame strength. Looking at the S&P 500 and the Dow Jones, we do have a few patterns forming over here. First and foremost, we are in a short-term uptrend. It's very important to note we are in an uptrend as we have broken out of this downtrending resistance. If at any point we fall back below this horizontal red line of space of support, we can then expect that continuation back down to retest this local neckline. That, of course, will be very, very bearish. As we've been saying for the last few days, we are expecting a continuation upwards to retest this downward diagonal resistance. If we break above this downward diagonal resistance, we are very likely going to see a continuation all the way up to retest these high points. So overall, the S&P 500 is looking bullish. It is looking pretty damn good. And of course, while the DXY is struggling, if the DXY continues down, we are likely going to see the S&P continue upwards. We are only worried when the S&P 500 drops back below this range of around 4,500. Looking at the Dow Jones, a very, very similar scenario. We have that short-term downtrending resistance, which we broke out of. We have that horizontal neckline of resistance, which we broke out of. We can see over here, we broke out, we came back below, we touched our neckline, we came up, we were breaking out again. And of course, we have this diagonal downtrending resistance represented by this black trend line. A break above this level, similarly to the S&P 500, will result in a continuation upwards to retest these highs and tap this liquidity zone. If, however, we lose this downtrending trend line, we break back below it, we can then expect a continuation lower. However, this is the most probable scenario as of right now. So the S&P 500, the Dow Jones are looking relatively strong. Let's go ahead and jump over to Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. There are a few things we want to discuss today. Of course, we have to go over the short-term price action. What is happening with the short-term price action? What this consolidation means? What are the targets for this consolidation breakout? What is the immediate short-term price action looking like? What are the key levels you should be watching out for? And how is the broader market looking? The total cryptocurrency market cap. How is the total altcoin market cap looking? How is, of course, the weekly chart looking now that we're retesting the upper band of that Gaussian channel? So let's go ahead and dive in, starting on the smaller time frame and then going higher and higher. So as we said at the start of the video, guys, Bitcoin has been consolidating now for about 4 weeks. This entire range has lasted at about 4 weeks. And, you know, I'm personally, for one, getting very bored of it. It is getting quite boring, but such is the market. We have phases where it's exciting, where we have a lot of price action. And then we have phases where we just have compression, consolidation, and sideways price action. When there is less opportunity and it is a little bit more boring, that is where we are kind of sitting here for the last 10 days. And it is perfectly normal. Compression is healthy, compression is good, it is preparing, gathering liquidity before we see that next directional move. So if we take a look at the current range we have our upper level of resistance, which is sitting around 38,000. We have our uptrending diagonal resistance, which is represented by this black trend line. And then we have the distance between these levels. So the distance between these levels, this area, this void between the upper and lower trigger points. This, of course, is going to be our compression zone. This is our consolidation zone. This is our compression zone. We are expecting a breakout of this range, meaning a break above 38K, or a break below, a directional break below the uptrend prior to the convergence of this point, which is coming to around the 7th to 5th of December. Now, I would also like to keep in mind or go ahead and pinpoint that we generally see a breakout of ranges within the last 30-ish%, or should I say before the last 30-ish% of this range. So assuming it's about a 30-day range, we can almost expect a breakout by the 27th of November. We're likely to see a break around about the 27th, the 28th, 29th of November. So it's pretty likely we're going to see a directional move in the coming few days. So we are keeping that in mind. So far guys, we have a directional range. We have, of course, our potential rising channel formation and ascending triangle formation. Okay, this is of course a bullish pattern. If we break toward the top side, we will likely see a continuation upwards. If we break toward the downside, we'll likely see a continuation downwards, and we are expecting this range to finalize around the end of this month, and at the latest, the start of next month. Let's go ahead and zoom out and discuss the potential targets that a breakout of this range could actually facilitate. So if we zoom out, we have our annotated areas, and we've talked about this chart a few times. It's very important we kind of look over it every few days to see how it is developing. We have got our bullish trigger. This is sitting at 38,000. 38,000 is not only a short-term bullish trigger, but $38,000 is also a high time frame trigger, as it represents the lower point of resistance, okay, 38K, of the 38 to 40K resistance range. Therefore, a break of 38K will likely send the price into the upper band of this resistance, which is sitting at 40,000. So we have our bullish breakout target at 40,000. That is a macro level of resistance. In fact, 38 to 40 is the first and most important level of high time frame resistance between the 32 and 48K range. If we look at this range over here and we just hypothetically draw, let's go ahead and just draw a parallel channel. I know it's not a parallel channel, but let's just do it for visual guidance. We can see that 38 to 40K range is that midline of this. So in fact, 48K is really that midline between 48 and 31.3, which is a lower level of support at the 32 to 31.3K range. So 40K is a very important level, and for us to see 40K, we have to break above that 38K trigger. So moving toward the downside, if we see a break toward the downside, it gets a little bit trickier, because what we are really seeing over here is a range of its own, right? We have a range low, we have a uptrend developing into the range high, and then our range low at 33,350 is as well a bearish trigger for a continuation lower and to fill the VRPV gap we see on that VRPV. We can see on the VRPV, we have a significant drop off under 33.350. We see a significant cliff until around 32, which starts to build up again until around 30.6, which is this local high point. We'll go ahead and move my camera, which is a local high point over here. So we have this higher time frame range developing within the current uptrend, or what should I say, outside of that current uptrend. So for us to see a retest of 33.350, we are going to have to lose the major uptrend the price action has been traveling within and along for the last 4 weeks prior to, and this is important, prior to breaking 38K. Because remember, if we break the bullish trigger before we break the bearish trigger, we expect a continuation upwards. If we break the bearish trigger before breaking the bullish trigger, we expect a continuation downwards. So that does mean we could hypothetically see a continuation down, a retest of these lows, and then a continuation upwards through that bullish trigger. That would invalidate this uptrend, suggesting a breakdown and continuation lower. However, these trigger points, these horizontal levels, will remain valid going forward. Unless they're broken, unless we see liquidity grabs above, they still remain valid. So as of right now, we are seeing compression, we are seeing consolidation, we will see a likely directional move soon. If we see a break of 38K, this is going to be the most obvious and simple scenario. It is going to be a simple scenario as we don't have this entire range between the next trigger point. Our trigger point is directly above us with our breakout target sitting relatively close, okay? However, If we see a breakdown of this uptrending support line, we can see a different scenario play out. We could definitely see a continuation down to 33.3, but we cannot expect this to be a quick or volatile move. If we look at the VRPV, we have a whole chunk of support sitting around 35k to around 33.8k. We will likely see a volatile move down to around 35 like we saw before over here to retest and either a bounce in this range, developing a shorter parallel channel, again a shorter time frame parallel channel in which we will consolidate, retest lows and continue upwards, or if we do break down from 35k, which is going to be a loss of this local low, a continuation to our lower range. So as you're kind of listening and as I'm kind of explaining this, you can see how this is kind of uncharted territory. It's very hard to say exactly how the price action will respond if we do lose this uptrend, other than we will likely see a continuation down. However, it is very obvious when we look at these trigger points, when we break above these trigger points and below these trigger points, we have these gaps, these vectors over here, vector candles, and of course these gaps in the VRPV, which suggests, again, volatility gaps, where the price action will with ease push through upwards or down below if we break these trigger points. So, to summarize everything on the short term, guys, watch the key levels. Within the next 10 days, we will likely see a break toward the downside or upside. If we see an upside break, that will be a clear of the bullish trigger. We will see a continuation upwards. If we see a downside break, we will likely have a first target sitting around 35,200. Okay, this will be the hypothetical range low of the current potentially developing horizontal range. It is speculative for now. If we break this level, we'll be entering this cluster of price action, which again is represented by our VRPV. This VRPV over here tells us we have a significant amount of historical orders in here, and with that we have potential support. If we do travel lower, we have the last potential support point at 33.350, and if that level is lost, we expect a continuation down to 30.6. Of course, this will be very, very bearish. In fact, I think this scenario is very unlikely. I think it is quite unlikely, and I would almost go ahead and say, while we remain above this uptrend, you have to be hedging more toward the upside, as the uptrend is an uptrend until it is not. Only when the uptrend breaks will then we expect corrections across the board for Bitcoin and aggressive corrections for altcoins. So watch out for that. Let's go ahead and jump into the short-term price action, and then jump into macro charts. So, again, guys, wow, it is choppy over here. It really is choppy. Again, it's very, very tricky to tell you guys exactly what is happening and exactly what will happen, other than to label the key levels and key trigger points. If we take a look at the price action on the short term for what it is, and what we're really looking at over here is going to be this cluster of price action between that 36k level and, of course, this 38k level. What we have is a very clear downtrend. We have a very obvious and very clear short-term downtrending resistance. We can see that short-term downtrending resistance meets the POC level at confluence, meaning we do have a decent amount of resistance sitting at the confluence point of our current short-term downtrend. So, with that being said, we are in a very obvious downtrend. The downtrend is expected to continue until we reach an area of liquidity, provided the downtrend trend line does not break. Meaning, if we break above this downtrending trend line, we will then expect the trend to develop a short-term uptrend. That trend could take us back to retest 38k. Until then, we are expecting a continuation lower on the short term to potentially retest this area of liquidity. However, we did get close to retesting it prior. We didn't quite reach there. So on the short term, I would be expecting a continuation downwards, unless we break above this downtrending trend line, which then I would expect the market to move back up. I would be more cautious trading this, and I think personally, like I've been doing the last few days, I'm more or less sitting out of it. I'm waiting for these directional triggers. I'm waiting for these breakouts, as we are in a obvious, and guys, it is obvious, right? It is a very obvious chop zone. There is no need to aggressively trade when the clear direction is not there, when we do not have clear direction, when we have this aggressive chop, and we are seeing aggressive chop. We're seeing sideways compression for days on end, very rapid corrections, very rapid rallies, very rapid corrections, sideways corrections for days on end, follow flush, repeat. Okay, this is a chop zone. Treat chop zones as you would treat them as higher risk and trade with that in mind. Let's go ahead and discuss high time frame charts, guys. So we do have something very, very bullish over here. And this, of course, is the potential breakout of the 14-day upper band of the Gaussian channel. Of course, the 14-day upper band of the Gaussian channel, the candle closes in about 10 or so days. So we've got about 10 or so days still until this 2-week candle closes, which will line up with that breakout kind of range, right? We expect about 10 days from here, which brings us to around that 3rd or 4th of December, which is kind of when we'll see that 2-week candle close. So if we do break above here again, we are very likely to hold above here long enough for the Gaussian channel to close above the upper band. And as you know, guys, when we break through the bands on the Gaussian channels, we very likely see continuations in the direction of which they break. So that would suggest to us we will likely see a continuation towards the dotted trend line, which is going to be that 48k level on the macro. So what I'm saying is if we break above the upper band of the Gaussian channel, close a 2-week candle above that, and with that we'll also be closing a 2-week candle above 38k, it is highly likely we will see a continuation on the macro to retest 48k prior to ever retesting 32. So that is also something you have to be watching. And of course, how do you kind of figure out what's happening there? You have to watch this chart. This is the most important chart, and as I've talked about like 10 times, because this chart right here details exactly the most important levels you should be watching for and the exact trigger points where the trends shift from bullish to bearish, or from short-term strength to high time frame strength, or from consolidation to continuation, or whatever range of different abbreviations or words or flips you'll see. This chart defines it. So watch this chart. Let's go ahead and take a look at this. Total crypto market cap is looking good. Objectively, it is looking good. And like we said, guys, the total cryptocurrency market cap will look strong, will look healthy, will look bullish while it remains above this red zone. If we fall below this red zone, that is when you should be worried. That is when you should be thinking, okay, Bitcoin could correct aggressively. Okay, we could see a loss of 32k. Okay, altcoins might get wrecked. Until then, we are bullish on the high time frame. Until then, the total crypto market cap is showing strength. It is showing relative strength that we have not seen ever since we lost this point in May 2022. Okay, we'll say it again. This is a relative strength in comparison to all of this price action over here. The only risk we have is deviation. If this turns out to be deviation and breaks back below, that is very, very bearish. We'll very likely see a correction lower. However, until then, that is speculation. Support is support until it is not. Do not expect massive corrections in an uptrend. All corrections in an uptrend are shorter-lived and less than you expect, just like all rallies in a bear market are shorter-lived and less than you expect, okay? Plan ahead and be objective. Let's go ahead and look at the total crypto market cap over here. For altcoins, altcoins are definitely looking not as good as Bitcoin, but they are catching up. We still do have some major resistance. Of course, we've got this macro resistance sitting above us. Let's go ahead and draw that one in really quickly. That macro resistance sitting directly above us, which we have kind of not really come up and retested. But historically, guys, you know, altcoins are lagging to Bitcoin. That is perfectly normal. There is absolutely nothing wrong with that. If we look at the Bitcoin chart here on the right, okay, and draw in that respective resistance, you can see that respective resistance is almost at 32k resistance level. So altcoins are still lagging on average to Bitcoin. They still have a lot of ground to make up, but historically, that is kind of what we generally see. If the altcoin market cap breaks above this 447 billion level, we are expected to see a massive rally. We can see this huge volatility candle here. We will likely clear, as we have done so on Bitcoin, right? So looking historically at altcoins and Bitcoin, if we look at when altcoins really starting to rally, let's go ahead and zoom out of here. This yellow line reflects where Bitcoin was at the time altcoins really only broke above that bear market resistance. So we can see over here, not the bear market, but the bull market trigger. That bull market trigger, the dead cat bounce high, okay, the dead cat bounce high is that trigger point. We broke above it and it started continuing aggressively upwards only after Bitcoin reached 38,000, rejected to retest this base of support in the prior cycle. So what does this tell you? It tells you it is okay that altcoins are lagging, and altcoins will continue to lag to Bitcoin for a very extended period of time, likely until, the first leg of the bull market is done. That doesn't mean that all altcoins will lag. There will be a few altcoins that will outperform, a few that will underperform. But we're going to leave the video there, guys. I've gone on for way too long. I hope you enjoyed it. If you've got any questions, leave them down below. Check out the Crypto Academy, guys. It is the link down below. It's a 10-unit course we teach you TA. If you're interested, go ahead and inquire, and I'll catch you guys on the next one. Cheers.